Good morning, everybody, and this is your Dow Jones day trade setup for today. So we've got a bit of a meltdown in progress at the moment, and this is really just based on noise coming out of the US. So yesterday it was announced that the Democrats are not going to be passing the 3.2 trillion bill. And the second problem is that the government's running out of funding, so they need to vote on that. And as American politics goes, Democrats and Republicans don't agree on anything, and lots of egos involved. So what will happen is you'll probably find some stalemate while they all manipulate the market. The market falls a bit until we see some value, and then they'll jump in. It's very strange that all these little tiffs are sparking right in the same week that the Feds will be announcing what they're going to be doing with their tapering program. So you can't help but to wonder, how these politicians try and play this game. But anyway, it's we just need to keep our wits above us and just watch where the levels are and just maintain your sanity, if I can put it that way. I just want to start with the weekly because that's the key components at the moment. So you can see we've got a bit of a breakdown on the weekly oscillators pointing to the downside. We've got a bit of weekly support here where we are now 34,200, 34,217. But at the end of the day, we are now, so there was a trend line and there's a trend line there. So we broke through the trend line, we're testing that trend line. Nothing really else except for this one here, and that's quite far down. Okay, so there's no real support here. This is where we are now. There is definitely support. You can see lots of tails here, but we have pierced it a couple of times, and we've actually closed below it before rallying. So for me right now, looking at the weekly, it is not looking very good. Looking at the daily, we've got a grouping of the oscillators. We don't have we do have some sort of diversions from this level here. You can see there, but I don't really I prefer to take diversions from the closest swing low, not the second one. So that's the one element that's in play at the moment, and there is another little level that we need to pay attention to. You can see how the buyer stepped in off there on the daily. So with all that noise in your head right now, let's just look at how that lines up on the 8 hour. And you can see fairly strong level here on the 8 hour, fairly strong level here on the 8 hour. So could also be seen as a much bigger range. Bear that in mind. So any move down to these areas could be seen as a much bigger range. I don't think there were any gaps that we needed to worry about. We'll have a look on the lower time frames now. But at the moment, with this meltdown, you can see the buyers coming in off this level. China and Japan are closed, so this is not based on what's happening in Asia. This is based on noise in the USA. So early risers have seen structure that we've got to, and they're busy buying. Wouldn't surprise me to see this whole meltdown here be eroded, and we just sort of hover around here at 34,600 area going into Wednesday. So for me, there's nothing really that we can trade right now. Hindsight being a perfect science, should have probably taken a stab at it on Friday and let it run, but wasn't too comfortable with that because we were bottom of a bigger range. So 34,600 broke and basically was retested within Friday, and we haven't had anything indicating anything else just yet. So oscillators grip the downside. Definitely don't want to be short down here, too far from the moving averages as well. Are looking for structure to the upside. Now there's two bits of structure. That's the first bit, so 34,528 and 34,608. So that's where I would be looking to be short. Not really interested in going long at the moment either, because it'll probably just fizzle out and then move. So I only really want to be long above the moving averages on the hour. I don't want to be long below them. So it's a wait and see game. So unfortunately, it's see some sort of a pullback and then ride this thing to the downside until we start, till the noise starts coming in. So it's very difficult for us to actually ascertain where we're moving to. I suspect we do need a relatively deep pullback on this. And if we come to the weekly, you'll see this is a bit of a different picture to the S&P, but the next bit of weekly support with a gap is down here, and that is 31, call it 31,400. So from the top, that would be a fairly decent 11.6% move to the downside. So that's kind of the view that we've got at the moment. I wouldn't read anything into this at the moment. Yes, it looks chaotic and bearish and chaos and things like that, but be very careful of trying to chase the shorts. Don't jump in short down here expecting it to fall. Rather wait for it to retrace onto structure. If it starts rejecting the structure, take the gap, take small positions, and keep your stops tight. Remember, markets are designed to go up. They're not designed to go down. Forex is a different story. It can swing either way for extended periods of time. But markets, politicians, egos, investors, pensions, it's all designed to make profit. It's not designed to make losses. So even though there are short sellers in play and there's a lot of moving parts, you still need to keep that mindset when you're sort of trading on a index. Okay, anyway, enough rambling for me this morning. It's sit on hands basically, ladies and gentlemen, not really looking for anything until we get to structure. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.